All right. My name is Chris Campbell. I'm a practicing CPA and I work with small to mid-sized businesses to help them pay the least amount of taxes possible while keeping them out of jail. So today I wanted to talk specifically to you small and mid-sized business owners that feel like when you have to deal with taxes, it can be such a pain. I deal with this with a number of clients where the end of the year comes, it's tax time, and you got to gather all these different things. And a lot of times you just put it off because you just don't want to do it. And it's pretty painstaking. And as a result, that's why a lot of folks procrastinate with our extensions and everything else and are waiting until the last minute to get things done with the taxes. So what I wanted to go through was a few tips, a few pointers or things that you should do, and you can do them now so that come tax time, you don't hate it and it's a little less painful to get your items together when it's time to do the taxes. Now, this does require, and I guess the first thing, and it's not even really a part of the list, especially if you're a business owner, the key here is that dealing with taxes is not a March and April. So in order to really optimize, probably working with someone year round. Doesn't have to be every second. I know that some of you that might have growing businesses or smaller businesses may not necessarily need the intimacy of dealing with an accountant every day or every month, but I would say at bare minimum, at least once a quarter. Tip one is that you should keep some sort of records or books. So on a very primitive side, you can put everything into a spreadsheet, but for those a little further along in their business, I would recommend some sort of bookkeeping system. The premier ones, or I guess the most popular ones, QuickBooks, Xero. If you're just starting out, QuickBooks may be a little expensive for you, but if it is, I'm actually starting to like Xero more and more. Books just use the raise their prices every year for no apparent reason. So there is a little bit of a learning curve with both. So if you're not familiar with either one, you'll save more money in the long run going with the Xero over QuickBooks. Now, when you have that set up, you should give your accountant access. Those two platforms, along with other platforms that are out there, their software is set up where you can give an accountant or a bookkeeper access via their own login. So they can either do the work, but also more importantly, access reports. So even if you do your own books, could they give your accountant access where they can, at the end of the day, pull all the reports that they need and get things done. So it takes a lot of the burden off you. So most of these accounting backbones have it such where you can easily just add an accountant role to the system. And it's usually as simple as putting in their email address in the right place and they get invited and use it. So that's something I have with a number of my clients on both QuickBooks and Xero, where they just add my email address and I can access and do what I need. Another tip along the lines of payroll, you can save yourself a lot of headache. If your company pays payroll, you have a payroll system or software that they use, kind of the same thing with the book. So it allows you to add an accounting role. And with that, they can go in and you can have it such that the role where they can't necessarily make any payrolls, if you're worried about security issues and someone cutting a check to themselves, there are different roles and restrictions you can put where they can just view reports, but not execute any checks. So with an accountant role, you really just need them to see the information. You don't need them to really execute anything. So these platforms allow you to add the role where someone can just view the data. So again, it takes a lot of the burden off you and your tax person pull whatever data they need as far as payroll is concerned. Another thing, which is point three, this one's pretty huge. I had to beat it into my clients' heads. Once they did it, they realized how much easier things were for them. Give your accountant or tax person access to your business bank accounts. Now, when I say give access, I don't mean give them a run on the account and they can just operate as they need to. What I mean when I say give them access, don't necessarily make them a signer where they can operate things on your account. A lot of banks now, especially business accounts, not necessarily for personal accounts, business accounts allow you to have logins for accountants or tax preparers where it's a read-only version where that person can go in and they can view the activity, they can pull the statements, but they can't do any banking transactions. So they can go in and view your activity, but they can't do any transactions. You don't want folks going in and haven't been able to cut checks to themselves, transfer money out, things of that nature. Again, just like how the books are set up and the payroll is set up, you can have it such that they can just view the information, pull your statements, view the checks without having been able to do anything on you. And again, that's such a lifesaver. Saves a lot of back and forth between accountant and client, where I no longer need to reach out to the client. What about this? What about that? What was this? What was that? I have access. I can pull it up on my own. So big time saver there. All right. Outside of the logins, one thing is if you have contractors and you pay contractors out and you have to issue 1099s at the end of the year, make sure you have the W-9s on file when they start, provide them to your accountant right away. So if you are paying someone as a contractor, again, a contractor is not an employee, but if they're performing work for you and not an employee, independent contractor, you have to issue 1099s to them at the end of the year. So to keep you from scrambling at the end of the year to get this person's information, get their W-9 at the beginning when you hire them, and then just apply it to the account. So when your accountant or a tax person is closing out the books, getting ready to send those, they have that information on file. They don't need to reach out. So you're paying a payroll system for contractors. Usually they'll handle all the 1099s, but if you're doing it on your own, you need a W-9. So get those right away. All right. Another point, make sure you separate your expenditures. So this is a pretty big one. So a lot of times, especially with more closely held businesses, they seem to mix business and personal expenses. Do as good of a job as you can, but I know sometimes it's tough to do it, but you want to do your best to separate your business and personal expenses, meaning that relegate your business expenses to one account, put all your personal expenses on another account. It just makes things a lot cleaner on tax time, because if you don't, then what happens is that if you put everything together and someone's going to have to go through all your transactions for the year and figure out what transactions are personal and business, either you're going to do it or your tax person's going to do it. But if they're going to do it, they're going to charge you. So it's either going to cost you the time or it's going to cost you the money if you don't. So do your best to keep things segregated. All right. Next point, receipts. So sometimes folks will come and say, oh, well, do I have to have all my receipts and send you all my receipts? So the days of that are pretty much over. I don't need you to show up with a box of receipts. We don't really need to do that. However, I will say the exception are for large purchases. So if you're buying a house, a vehicle, or trading in a vehicle, or any sort of fixed assets, like large pieces of equipment, you should probably keep the receipts for and send those in. Because usually with those large purchases and fixed assets, there is some sort of calculation involved that the most part, your tax person will need the details of those particular transactions. So just make sure you keep those set aside. So large purchases, not day-to-day stuff. I don't need the receipt for the $5 supplies or the $2 coffee. We don't need that. But for the larger purchases, fixed assets, vehicles, houses, major equipment purchases, save those receipts, submit those so your tax person, accountant can account for and record those properly and maximize your deductions. All right. So I think that should do it. If you follow those tips and if you start to implement them now, your tax seasons will be much smoother